Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only 2 kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan, not changing it because you're having an emotional meltdown. No! Does it get any easier? That's what we're talking about today. Thanks guys for tuning in. Those of you who have been watching the channel for some time, you know what I'm about. But thank you if you're new. I really appreciate you. For those of you who've been watching me for a while and haven't subscribed, you know where the subscribe button is, you know where the like buttons are, you know where everything is. Let's just make this channel what we think we can make it. Because for me, this channel is all about being open, being honest, being truthful, talking about markets in the way they are, and giving people value and nuggets that they can take into their trading life and turn it around if you've had some struggles. I'm just a humble trader. Been doing this for well over 15 years now. I think I've done all right. Still doing it, so it is what it is. Mentored quite a few people, to say the least. Some of them have gone on to do some really good things. Other people, maybe trading wasn't for them. It's what it is. The thing about this business is that you really have to think about where you want to go. And that's the reality of it. If you don't have a goal or where you want to be with it, you just want to be a punter, then it's not going to get easier. It's just the way it is. It's not going to get easier. This is the place in the world where the smartest people come. And even if you're pretty smart, in some cases, it's not going to work out because you're going to use your brain in a very different way. And the market sometimes doesn't require that. But you're going to see a lot of people coming in with that other higher level intelligence that they've taken from another field. And then they're bringing it in to trading and thinking, well, I'm so smart doing what I was doing before that there's no way I'm not going to crack this. And then when they don't, ego kicks in and then it's a whole nother story. It's what it is. Does it ever get easier? Honest answer is no, it doesn't get easier. It's just the way it is. This thing never changes. You get more comfortable with it, but it doesn't get easier. You might learn to manage risk, which I talk about a lot on this channel. You might want to manage some risk so that you can sleep at night, but it doesn't get easier. It is technically hard all the time. But of course, I sell option premium as a way to make weekly income. And of course, I trade generally everything from futures, equities, and you guys will see that here. I guess it's appropriate to start off with how did the week go? Well, as you can see, for the first time in my premium selling career, well, not the first time, but for the first time in a long time, I've been short the call side. It's turned out to be okay, but it's been a crazy week. And this is what happens when politics merges with markets. It's insane. In any case, you know, I was short PayPal puts. As you can imagine, it's been the most volatile ride, and at some point I had to shell my PayPal. Despite being April 17 calendars, I had to shell them because I was overweight on PayPal, and I thought, you know what, it's not going to happen today. Maybe another day. Maybe another day is the day I blow out completely. This is just an utter disaster. But today won't be that day. So I shelled the PayPal puts. I was like, look, it's fine. I'll eat a loss on these and I'll make it back. Not a problem. Shell the PayPal puts. So I spent the rest of my week now trying to lessen that pain, right? So short calls, covering them, short again, covering them. I've got a couple of clips more in, and I'm now rolling to break even. So that's where I am, right? So as you can see, I've rolled, created a break even buy stop at $1.03 if these things back up. Now I know they're not going to back up because AMD is trading 137. When market closed yesterday into post market, they were about 101, somewhere around that. Anyway, I've got the 104s. They are now over one standard deviation out, so nothing to panic about. So the chances that I'm going to hit that is very slim. Now, of course, you know what? It's took me a long time to get my head around all of this, manage risk in this kind of way, even when a trade goes bad, which is what no one wants to talk about. No one wants to talk about when their trade's going bad. How do you fix it? How do you manage it? How do you eat that loss and then figure out a way to make it back? Because that's when you really start working, is when you're taking a bit of a loss. That's all it is. Of course, you can't be a trader and say you haven't never taken a loss or not want to admit to taking a loss. You just got to do it because you're going to take losses, you're going to get wins. Right? When you're in the premium selling game, you're getting wins a lot of the time, and when you start getting losses, you really start getting losses, and that's just what it is. Ever wanted a prop firm that would just fund you and you get to prove your ability? Meet Tradify, the futures prop firm doing just that. Choose from tailored funding programs that align with your trading style, offering account sizes up to $750,000 with the ability to go straight to funded account, skipping evaluations. Experience seamless trading with their integration with top-tier platforms like Tradeovate, providing powerful features and access to the latest technology in the futures market. Enhance your strategy with automated trade journaling, offering in-depth analysis to refine your performance. Follow a transparent path from evaluation to live funded accounts with clear rules to support you at every step. Start trading a fully funded account now with Tradify. Please use the link in the description below. It supports the channel and our sponsors. And then you go back to getting wins, right? Because it's a high probability way of doing things, so you're like 80-90% of the time right, and then you're going to get these odd occasions where you now have to work a little bit to manage your positions and take some losses, and then you can build back from there. Name it again. So I've got a couple of clips left in short calls. AMD March 7th expiring pretty much tomorrow, so is what it is. And I've had a harrowing week too, because I've been up and about a lot. It's my wife's birthday, so you know, is what it is. I've been a little bit busy and I've been trying to manage all of this as well. In fact, I wasn't even sure I could even get you this YouTube video just because I was so snowed under. I didn't think I'll be able to do it. So eventually I'm recording the video now. So hopefully you're going to be able to see it on the weekend. But that's it. It's been a busy week, and sometimes there's just no time for YouTube, and when you get crazy markets like this, you just go silent because you need to manage all this stuff, and you know, you don't want it going sideways because you had to talk to a few people on YouTube. You know, it is what it is. So does it get easier? It's the point. And as you can see, despite how long I've been doing this, it's the same hard. It's like just like when you started. It's the exact same hard. I'm more comfortable, so I'm more nimble, but it's just the exact same hard, the same story. At some point, you've got to retire from this business, honestly. And you know, it is what it is. Like, yeah, I work with a lot of people now. I mentor a lot of people, help them get where they need to be. So that's a good way to use some of my time now. You know, at some point, like I said, you've got to retire. So when you come into this business, you have to have a plan from where you start. You develop, you grow, you learn, you do well, you help others grow and learn and do well, and so on, right? It's all about performance coaching, because at the end of the day, as a new trader, you need to have the performance level. And once you've become comfortable, that's what I mean when I say performance level, is you become comfortable with getting in and do the business, and your performance goes up naturally, right? And I'll show you, I always try and give some value here. So I'm going to show you something that you're probably going to take away with you, and I think it's going to be really good value for you. You are going to learn something. You're going to learn something you've never learned before. So when I say performance, essentially what I'm saying is that you get more consistent, you get more comfortable doing it. And it comes from being consistent with doing it, just because you've got a lot of data. Over the time, you've got an idea of how most markets function, ones you can profit in, ones where there's not a hope in hell that you're going to make any money from those markets. You figure it out in the end, and then you focus your attention on the markets or the asset classes that you think you've got a bit of an edge in, you can make some money. That's it. And then you work it, and you work it, and you work it, and it gets boring, but that is what you do in order to make the P&L. Someone's got to coach you through this, because it's a mindset shift. I personally don't think that any individual can just get up and just do this without having someone trigger that mindset shift, give them something that's repeatable, which means the person has to have done the data work. So as long as you keep repeating it, you should get a fairly decent result. But that's the thing. You need someone to help you get there. You need a performance coach, someone that can take you from that place where you don't have the consistency because you don't have the mindset yet, to the place where you have the mindset so you can develop the consistency. People talk a lot about consistency. You've got to be consistent, you've got to be... What does that even mean? If your mindset is one where you're like, I just need to make lots of money now. I really don't care about the long run. I just need something now, and I need to see green. Fair enough. But if you've got that kind of mindset, then it's going to be difficult to be consistent, because you're going to be chasing green as opposed to chasing data, chasing provable statistics. Now look at it this way: when you're a trader, when you take trades, it's like flipping a coin, right? Heads or tails, 49.51. That's the probability of a coin flip, heads or tails dropping. So nearly 50-50. Now, if you've got an idea that yields, say for example, a 2-to-1, on a 50-50, you're going to make money. On a 1.5, you might just about make money, but you're going to get eroded a little bit on commissions, right? But you're still probably going to make money, not as much. On a 2-to-1, you're definitely going to make money. Even with commissions, you can add it up. So for most traders, you need to find an idea that's going to be at least better than a coin toss, which shouldn't be too hard. And then you got to consistently execute on that idea. Now, most people can do that. Most people can do that. That's why kids can do this and make money sometimes. There's lots of teenagers or, pre-adolescents who are making money. Right? And this is what's toxic about this business, is that there are a lot of people making a lot of money and they're not doing anything special. It looks crazy, but in the long run, when you look at it, it's just, that's what's going on. They've got an idea and they're constantly doing it, and that idea has a bit more payoff expectancy. As a result, they make money, right? But it has to be done over a longer period of time. There has to be a level of consistency with the way you execute on these things. Call a spade a spade. Okay, I'll show you something. Let's grind into the meat of it. right, which is what I like. Are you ready to take your trading to the next level? Discover Atas, the professional trading platform designed to transform the way you see the market. Atas specializes in advanced order flow and volume analysis, giving you unparalleled insights into buyer and seller dynamics, so you can make confident, data-driven decisions. With over 400 footprint configurations and 14 unique chart time frames, Atas allows you to eliminate market noise and focus on what truly matters. Access more than 240 indicators, including proprietary tools like Delta, Cumulative Delta, and Market Profile for deeper market insights. Trade seamlessly across 25 plus global stock, futures, and cryptocurrency exchanges, stable and secure connections. Simplify your trading with a user-friendly interface, one-click order execution, and automated exit strategies for maximum efficiency. Refine your skills with Market Replay. Practice strategies, test trading robots, and improve without risking real capital. Take full control of your trading with their extended API, enabling custom indicators and tools tailored to your strategy. Elevate your trading experience with Atas. See the market through the eyes of a professional. Sign up today, link in the description below, and take control of your financial future. Market Profile, for example. I like Market Profile not because it's this super special tool. It is a super special tool. But I like it because it makes things a little easier. The business itself doesn't get easier, but having something like this will make your life a little bit easier because you can visualize a lot of data. Now, if you've never seen this before, I totally understand. I've got a ton of videos on Market Profile, so just go through the channel. If you need to talk to me, I've got this my Discord links in the description below, so you can pop over, DM me, ask me questions, totally open book. You can do that on the Discord, so not a problem. Back to the point. I like it because it's easy, right? I can look and see a few things, get a few statistical concepts, benchmarks, even test for different ideas that I might want to put into play into a more repeatable sequence, right? Something that I can just do on autopilot all the time. And in the end, that's going to give you a level of expectancy as long as it's risk managed properly. That's the thing. So as long as it's risk managed properly, you're probably going to make a profit. Market Profile allows you to do that in a way you'd say in a one-click fashion. I don't need to do too much moving around. So for example, this here is a daily profile of gold. Right? Easy to see. I see each profile is 1 day. I can zoom into this. You can see it a little bit clearer, of course, and then that allows me to observe some benchmarks. Now, typically, what I say to new traders is a couple of things you can do. If you're very new to trading and you're trying to find some comfortability, you want to find something that works, that's repeatable. Well, the first thing you can start with is take an asset like gold. It's a little bit volatile. It's a commodity. So unlike maybe, say for example, a stock, it's a commodity. So it's got decent movement within the day, a little bit volatile. You can start with that. What would you want to do first? You want to think about something like a value trade, right? It's the easiest trade you can do. It's a very high probability. In the industry, we call it a 70% probability trade, the value trade. Start. What's the value trade? I'll show you an example. Now I've got a ton of content on this. Some of you already know what a value trade is, right? So bear with me. For the people who are new to this channel, they don't know what a value trade is, and this is probably going to start to change their life immediately, because this is the kind of stuff that professionals do that they don't talk to you about. They're just not, it's not there. They might come on, they might try and wrap it in different concepts, but they just don't talk to you about it. Right, so the rotations here are 1 hour. I like an hour rotation. Some people will say they want 30-minute rotations because they have read the book. All right, and in the book, it's 30-minute rotations, okay? But I prefer 1 hour rotations because this is something that I've back tested a lot. And if you're thinking what book, well, good old Jim Dalton, what other book could I be talking about? But in any case, I prefer to have 1 hour rotations. All right, so we're going to go a bit historical because it's really easy to talk about today. I mean, this is pretty much market running today. Market opened, Asia popped up. Overnight, there was a potential for a value trade. What does that look like? So you can do this both dynamically and also with previous value. So typically, if you're able to catch this, this is value high and value low. These are the fairest possible prices, statistically calculated. Right, this goes with mathematical theory of the bell curve. So we've got this normal distribution, wings of the distribution, outliers of course, and most of the distribution is going to stay within sort of one standard deviation of the mean. Right, so 70% of the distribution, that's why we call it a value area. So 70% of the distribution within one standard deviation of the mean. So as we pushed out, we were in outlier territory, and as we start to push back within value, there's a 70% probability that the market's going to trade the entire value area. That's it. That's all there is to it. The idea is that now we're pushing, going down, heading possibly into new value. So that's a deeper level of the concept of a value trade, so I won't get into that right now, but we might even move into new value and try and take that. Because value perception is higher, it's unlikely we're going to be able to do that. In most cases, we're going to find a bid and then we're going to start to rally. Right, we're so far away from this value area now that dynamically today, unless we can get a really snap recovery, which is possible, then I would have to make the assumption that we're going to see a shift in value perception, which means that new value is going to develop lower. Really simple. So that's a broader context of the concept of value areas, right? But dynamically, you can always look at previous value and then attempt to trade against that. Now, of course, how you risk manage this is going to vary. For example, I might prefer to have my stop at a high of prior day. That makes sense. And I'm only going for a value trade. So on a risk reward basis, well, there's nothing in it because, I'm only putting risk in place to accommodate for volatility because I know this market can move around a little bit. And point in case, this is a trade that I've done for my futures portfolio already, right? So this has already happened. So I'm just explaining it so it makes sense, right? So the value trade is the easiest trade you're looking to do. Really simple, really straightforward, right? That's today. And then you won't trade again, right? It's nothing to trade. I mean, you can look at another asset and see if you can do a value trade or not, but this is done. So you can't force it. A lot of people will be like, oh, look, gold is going down here. I can see that. Should have held on. But that won't be a value trade, right? The idea of a value trade is I'm trying to trade value, not trying to hold on, because this is a quick and easy win. And that's the point. Does it ever get easier? It doesn't. If I start trying to hold for the entire move, then it's going to be even harder. So I'm trying to make it a little bit easier for myself by doing a specific kind of trade. I don't know, a lot of people are like, yeah, you're just saying that. So just show you an example. Let me just do that right here. And I'm just gonna, oops, that's my bad. Just gonna wheel this over so you can see that I actually did this trade. Right, so as you can see, right? So you can see that I actually did this trade, and you can see that short on value and then I covered it. Really simple, right? Evidence to say. It's the exact same trade. It's a value trade. I just had this the prior day before against dynamic value, which I'll talk about in a minute. But in the end, if I was doing this trade exactly today, the same thing, I was looking for the same thing, was to go through value. Really simple, right? So let's just cut a bit of a screen cut out there so you can see. Moving on. I just like to clear these things up. That's what it says. It's all about honesty and transparency. I'm telling you this stuff because it's stuff that's happened and you needed to see that. Anyway, moving on. Let's talk about what it looked like the day before. It's a bit harder to gauge dynamic value on a prior day, right? Because you're doing it against this, for one. That's where your head's at. And then you've also got dynamic value because you've got value trading inside of value. Always makes it a little bit more complicated. So you can see that traders responded to that in the same way. So as professionals, as the market went higher, to higher deviation to value, there were a lot of people who wanted to stay short. Right, it made sense because you're trading a fair value high, you want to stay short. And that's what happened. They went back through value. And then as they got to value low, they thought, crazy market, I best cover. So they covered into a major open, and then we rallied back through value. And then they thought, well, I best cover again. A lot of short-term money in here, so there wasn't a lot of long-term money to cause any kind of range extension. So everybody's staying, and then you think, well, for me, I'm thinking, well, that was about U period. Thinking, well, we're clearly failing at the higher deviations. So there's a value trade in this. Maybe not the whole way again, that would be optimistic, but I'm gonna go for a value trade against dynamic value, which was roughly about the same at this stage. So, but when you think about it, it's still a 10-point move in gold. It's a 10-point move. Now this is of course a filtered profile in that each row size is 10. What's the, you can measure that actually, because I have to do it. So you can see, each row size is about 10 cents or $10, right? Depending. I say $10 it is. That's my bad. I said 10 cents, didn't I? Oops, hold on. Might be. Yeah, I said, so it's each row size is effectively $1. It's $1 move. That's my bad. I said $10. Each row size is $1 move. So it's still a decent move. Like a 10-point move is still fairly decent for gold, right? That's a $10 move. So the fact of the matter is, coming in at these highs gives you an advantage, right? And that's what we're trying to achieve. Now, the reason why the value trades a 70% probability trade is because most of these markets trade around value a lot, especially commodities. Now, of course, it's not always going to work because you're going to get wide value areas, for example, with a lot of stacks there, offer stacks or bid stacks. So it's going to be really difficult for you to get a value trade. So say, for example, let's say you were setting this up for a value trade. That's not very high probability, is it? Because now you're banking on the fact that gold's going to do range extension. You can see it started, right? Moved about 15 points before it's had enough. And that's because we have an elongated value area because there's been a lot of sell pressure forcing this market low and extended value. So to recover that is either going to take a couple of days, or we're not even going to recover, it's just going to keep getting lower. This could be the consequence of a big seller. And you can see, based on the stack, there probably was a big seller in here. So this is obviously going to be some kind of dynamic resistance. So even if I was going to think of this as a potential value trade, well, it's going to have to stop somewhere midpoint, right? So it's not necessarily a high probability setup, even though it's trading the lower value. And you can see for a while, traders respected that and this market went higher before it dipped out again under the sell pressure. But then we formed new value here, right, slightly depressed value area, and then we open the market at a higher value. Now, of course, if we're thinking this thing's not going to go up, then there's a high probability it's going to go down. We might think, okay, we'll go for a value trade, right? We're on the higher deviations already. On the open, this is in Asia. If you could spot this in Asia, then, because you have to be up in Asia, that's the other thing, then you go for a value trade against that. And if you can't spot it in Asia, then you're going to miss out on the value trade because it didn't really come back in, right? But so this would have been a high probability setup, but it might have been a decision that you may have made, say about W period, before the close of the day, and thought, well, if we're up here against value, then we should likely trade this over Asia a little bit easier. So that's why I like market profile. It's easy, and I mean there are countless examples. You know, we've got this one here where we had prior value, we have a lot of overlapping value, and then we opened at an outlier and started to break in sort of DE period. You can give it a little bit if you want, just to make sure it settles. And as we broke in, maybe the print rotation. So as we rotated in, you could have thought, I'll get short here, and I'm looking for a value trade, through value. Really simple. So you need something like this as a new trader that you can consistently execute on every single time, because what you can start to do is get a bit of a spreadsheet and start to put down things that are working, right? Start to write down, okay, value trade today worked out perfectly, value trade yesterday didn't work out perfectly, and then you kind of manage that P&L. Typically we're talking, the value trade for us here is yielding, give or take, top to bottom, even with a bit of overhang, we're talking 10, 11 points. So if you're recording 10, 11 points pretty much over 3 or 4 days, it stacks up pretty quickly. Right, let's take the day prior, right, same scenario. We opened up in Asia, traded up here again, if you're a value trade, came back in again, another value trade, and then we started to hang. Right, you might have thought, okay, coming in for a third, it's gonna be Christmas, and then what do? We overextend. Right? We start to walk our way up and push further out. At some point we come back in, but we base out and then start to go. So the market's struggling to retrace value again. So at this point you start to think, should I cover this trade? Where would your risk have been? Maybe you thought your risk was top of C. Well, it's what it is. Eventually your stock would have been taken trying to do the value trade. Right? Nothing you could have done about that. You started in on the overhang, you had about a 12 point where you got touched out. Max loss for the day. Don't do anything, you can't fight it. We might come back in again, but we don't care about that. The idea was not to take a loss today. Well, you're in that 30% territory where it doesn't work. Is what it is. But you got 2 value trades on the day if you were paying attention. So you made some money, you might have given it all back or given some of it back, 50% of it back, give or take, right? Again, you have another example. We push up, open, and a little bit on the high side, push up, and then start to break down. Again, typically on the return, you might think, well, there's a value trade potential here. Goes, struggles a little bit, right? Gets to about, well, it does get slightly to the higher deviations, but then breaks down. Nothing you could have done about it. Is what it is, right? It's very possible that you thought this, and if anything, you might have closed the day, break even, no money, right? If you were in Asia and you managed to catch the value trade down, perfectly fine. So there are going to be these tight value areas where things are going to look a little choppy, right? Here, similar, we opened up, started to think, break, the market moved against you. Moved higher, eventually came down to do value, but you'd have to accommodate a loss on this. But it's an easy way to keep executing and be a little bit consistent with the execution and add up the data. At the end of the month, what would it actually look like just consistently trading the value trade on gold? Simple as that. Once you have that data, you can come back and have the conversation that it works, so it doesn't work. Most people never get to the data point. Like, I've been doing some trades on live cattle for the past month. Data's pretty good. Not a huge live cattle trader, but I've been doing it because I wanted to accumulate data on what I thought was an idea that could be run in live cattle. That's the business of a trader. You're always looking for an edge. What market could give you that edge? So you've got to go through like a ton of markets to develop that edge. Some people run commodity funds where all they do is commodity futures within their commodity fund, and then they've tried to grind down a lot of different ideas, sometimes put them into algorithms, whatever, but the bottom line is that they've had all these consistent ideas that they've built data on that they can now deploy. If you never get to the point where you accumulate enough data on what you're doing, you can't really say it's good or bad. Then you just become like that guy who likes to criticize. Always on social media saying, oh, this don't work, this guy's a fake, that guy's a fake. You become that person just because you don't have the data. Is what it is. So I'm very data driven. Right? I need to be able to see the data and then work with it. So does it get any easier? The fact is it doesn't. You've got to be looking at consistently updating, consistent with your game. Obviously, I felt I'd take the time to show you guys this, but that's it. That's the reality of it. Sometimes you don't have better news for traders. But like I always said, good performance coaching, right? The ability to consistently do something repeatedly will not only give you data, it's going to make you a better trader, because you're going to understand the markets you work with a lot better than you've ever understood them. And in some cases, you're going to discover other edges you can work with. Is what it is. Because you're going to be driven now by a lot of data and performance. I sell option premium because I know it's an 80% probability, 80 to 90% that most of my option premium trades are going to work out. So don't mind taking a loss on them, because I know there's always an opportunity to build them back. Even on a down market where market's going crazy, I know I can still sell puts and make money. Now, point in case, I didn't have to shell my PayPals, right? Because they're trading 69 now. But like everybody else, the S&P is rolling over a couple of 100 points in a given day. You're thinking, wow, maybe the world's ending, right? Maybe this is the point where, it's like the world we left behind or something. So the truth of the matter is you don't know. You don't know when that day is going to come, because no one's going to tell you. Markets are going to react first. So you've seen 100 points. So they're talking about tariffs. It's like, no way. There's no way tariffs are doing this. But the markets are still rolling over. But I didn't have to show my PayPal puts. I could still hold it. But you don't want to risk being overweight and these premiums really pick up. But that's it. That's decisions. Those are the decisions you got to make as a trader. You got to decide based on what your risk tolerance is, how overweight you are. And that's another reason why sometimes it's not good to be overweight. But sometimes we do end up a little bit overweight, because at some point we got to step on the pedal, because that's where the P&L is going to come from down the line. In a high probability situation like put selling, you want to have your foot on the pedal, but it doesn't always work out. That's the point. It works out a lot of the time, but not always. But the only reason I know that is because I got data on it, and I've been doing it consistently for quite a long time. Point in case, guys. I guess we can leave it here till the next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Ha 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 ha!